And we are live. This is Travis from Carter Cow Capital Trade with Travis and Expert Advisor Reviews on YouTube. Hope everybody's doing very well on this Tuesday morning as we go through and be able to take a look at some trading opportunities. What I'm going to end up doing is going through the disclaimer first, and then after that, we'll be able to place in or start to be able to take a look at some overall trading opportunities. We end up having a slow Monday for the first bit of it, and then after that, started to be able to push a little bit, which was actually pretty good. Uh, and hopefully ultimately you end up profiting off of that. But we're going to end up talking about how does that translates to what we're going to end up seeing today. Let's go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. And understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative. Past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. All right. So with that being said, as we go through and be able to take a look at the charts and see what's going on, I want to make sure that I end up saying hey to everybody. Uh, I end up placing in this information late of actually going through and kind of doing some stuff for the expert advisor review page and trying to get I'm trying to make sure I end up getting all that information situated for everyone so people can be able to see what was going on with that. We're actually going to end up doing we actually have a great review on the most wanted EA that I'm going to end up having posted out. If not tonight, definitely by the morning. Uh, Nice artificial intelligence EA that ends up using GDP, uh, which is something that has been really been talked about. I know with Chat GDP 3, it's been one of those things, but um, I don't know. I think we might be looking at some new wave of super codes and expert advisors that may end up helping people out and be able to make a little bit of money. So I wanted to make sure I end up putting that out so people can be able to look at it. But as I go through, please make sure that my sound is good, and make sure that you end up saying hey, and then after that we end up going through from there. Earlier today, earlier today, President Lagarde ended up speaking. We end up having the pound have the S&P Global CIS Services PMI that end up coming out. Obviously, we're going through a lunar New Year, which is making the market be a little bit more slower when it comes down to movement overall. We probably might end up seeing that happen all the way through until at least the end of the month. But a little bit later on today, we're going to end up seeing New Zealand have their CPI. I'm going to end up seeing Australia end up having their CPI as well, with overall news. And then after that, going into Wednesday, we're probably not going to see that much news that's going to end up affecting the market, but you will end up seeing the Bank of Canada will end up having that overall interest rate decision overall. And then after that, on Thursday, it looks like it's not going to end up being anything. So it looks like like I ended up saying yesterday, we're probably in on a slow week overall, but and truly being able to see how the market's going to end up moving is going to be one of those things that's going to allow you to be able to understand how you should be staying in or staying out of the market, depending on the way that you end up trading. So that's how everything's kind of going overall. Now, with that being said, let's go ahead and take a look at the big three real quick. I'm going to analyze the big three. If you're not familiar with that, that is United States dollar index, that's gold, that's oil. The reason why we look at those is because it allows us to be able to understand from a holistic standpoint what is happening between these three correlations. The United States dollar has a huge United States dollar index has a huge correlation of what's happening with United States dollar pairs. So like Euro, United States dollar, US yen, US Swiss franc, US Canadian dollar. All of those correlations will end up allowing you to be able to know what's going on. By being able to take a look at the index, you can be able to know what's happening with the individual pairs. So if you understand how to be able to look at the index, you don't have to look at the individual pairs unless there's something that you can truly see based off of the index. Typing a Y, yes, if that makes sense, as we go through. All right, now United States dollar index, we end up placing in a trade. We end up saying that we end up getting in at 12,814. Our take profit was 12,626 overall. The market started to consolidate, and when it started to consolidate, we decided to be able to get out because there's no reason of being able to stay inside of consolidation trades because there is a 33% chance of being able to win. Uh, Cass, what's going on? Can you speak on US yen? Absolutely. I'll take a look at that. Hope everything's going well with you. Um, let's see. But as we go through and take a look at what's happening with United States dollar index, as long as it's inside of this consolidation, there's really no new trading that you should be looking at being able to do. Now, we can clearly see that the support that we basically end up having was right around 12,675, and the resistance is, if we're being aggressive, we can be able to say right around 12,750, somewhere around that area, 12,760 overall. Placing a horizontal line so everybody can be able to see that. 12,757. So ultimately, you can say 12,760 if you want to, just to be safe. I'm going to make this as blue. I'm going to have 12,757 as that position. There it is right there. That's your resistance. Support is right there, 12,666. Okay. All right. We'll go with that. And that will end up being natural support until this market ends up breaking out of this area. There's really nothing to be able to do when it comes down to trading. Now, I am going to say this. Before I end up taking a look at the US yen chart. What we're probably going to end up seeing is somewhat of the same, which means that we're probably going to end up seeing consolidation inside of that trading, which means that we probably won't be able to find a great opportunity until it breaks out. But we will take a look at it. We'll get right into that after we end up going through the big three. All right. So U.S. oil's been in consolidation between $70 and $82 currently right now. This market is still inside of consolidation, so there's nothing to truly be able to do off of U.S. oil. So I'm not even going to waste anybody's time. We probably might see the market truly start to be able to make its movement when we end up seeing that the Canadian dollar goes through its monetary policy report and its interest rate decision, which will end up being tomorrow at 10 o'clock. So please pay attention to that. You probably might end up seeing a little bit of movement when it comes down to that, when it comes down to oil after the fact, when it comes down to that. All right, taking a look at what's happening with gold. Gold was one of the bigger players over the course of the last week or so, finally being able to break out of consolidation spots. Overall, we take a look at it from a daily perspective. We can clearly see that oil's finally end up breaking out of that 1671 to 1820 position that we end up getting into. Finally end up hitting the D extension right around that 1874 area, and currently right now, as we see it start to move, it's starting to get right back up to the top and the highs of where this market was previously, where the market ended up peaking up here at 2070, and right here at 2070 again. This was right when the Ukraine war actually ended up starting overall. Can you speak on Bitcoin? Yes, that'll be the next one that we end up talking about. Typically, we end up getting through that one as the last one to be able to know what's happening with the overall market. We will take a look at US yen as well to be able to kind of understand when it comes down to smaller pairs. All right. But what's happening currently right now? So I did not want to take a trade on this one yesterday, primarily because when you take a look at gold has a strong correlation with the Japanese yen and has a strong correlation with the Australian dollar. Well, the Japanese yen markets or Japan markets wasn't necessarily trading yesterday, I believe, and there wasn't no reason to be able to jump in if you wasn't going to end up getting any trading or activity from in those actual sessions. So I did not take a trade from there. Now we can see that the market has found a little bit of resistance right up here, which will be at 1940 overall. The question is, are we going to see this market start to flush down a little bit and then start to build out some consolidation and kind of prove that this natural support of 1900 will actually end up, or that natural position of 1900 and that whole number will actually end up being a support? We have 1940 to 1900 as the actual range. That's only one way to be able to find that out truly, is basically being able to wait to kind of see how that kind of defines itself. But once it defines itself and we have a position to where we can actually be able to place in our trades, then we will actually be able to do that. For both of y'all not necessarily familiar with the way that I end up trading, I end up doing something called a vortex strategy. Essentially what it is that if you take a look at a lot of consolidation is led by high volume nodes. And it would be nice if I put myself on the screen. Let's do that real quick. I haven't shown myself yet. Okay, there we go. Cool. What you'll end up seeing is that based off of that based off of that consolidation, what you end up seeing is that there's a lot of low volume nodes that once the market ends up breaking out of, you can be able to take advantage of. And that's the way that we typically end up trading, especially in a market like this where it's not truly trending, it's not truly in consolidation, it's kind of in the middle. You can kind of get the most out of it. So I'm still going to wait on this one to kind of see what's happening overall, but that will kind of allow us to be able to know what's happening with US yen. Now, we talked about Bitcoin um, in three different manners. We end up saying that we end up getting in when the market ended up breaking above 17,000. We end up getting out at 18,240. The reason why we did that was because that was the top of the resistance of this consolidation area as a whole. We also end up saying that once it ended up breaking above 18,240, then it was going to end up going into three separate positions. It was going to go to 19,663, 20,370, and then after that, it was going to end up getting up to the top of resistance, ultimately up to that 22,450 number, which was basically the halfway point of this large consolidation area that we end up having in purple on this left hand side. Type in a wire, yes, if you can be able to see that. Now, as we go through this newest phase of consolidation that we have inside of here, we can see that the market is ranging between 23,290 and 22,460. Ultimately, as the market keeps on pushing up, as we end up saying before, once the market ends up breaking a resistance, it has to end up going to the newest resistance. The newest resistance and the ultimate resistance that you're going to end up seeing is going to end up being right around 24,350 and then ultimately up to 25,000. Being able to see if it can break outside of this purple area that we end up having inside of here. Yeah, see it zoom out a little bit. Let's go back. Show it in the 4 hour. Make it a little bit cleaner. But ultimately, we're trying to be able to break out of this large consolidation zone that ended up happening from the early portions of June all the way until November when the market actually ended up breaking out the last time. So the market hasn't truly had a true retracement as of yet. As long as the market stays in consolidation and starts giving its moves, all we've been seeing is this: consolidation, big wave, consolidation, big wave, consolidation, big wave, consolidation, big wave of movement, consolidation, big wave of movement. And if you take a look at that, when it comes down to how it's been showing up on volume profile, you will end up noticing exactly why as we end up pulling that up. I'm going to pull it up real quick so everybody can be able to see that. Let's see. If y'all notice, I'm just going to do this very quickly. Consolidation, high volume node. From that high volume node, market ended up having a large wave of a push, which is also known as to us as a vortex area or vortex trade inside of there. Once it ended up pushing up, it ends up pushing up to this next high volume node that was right here. Market consolidated a little bit, gave us a defined range to be able to know where to stay away from, and then it told us exactly where the market was going to end up going again, which was right here. Currently, right now, the market is doing the same thing, and it's consolidating one more time. And now when we look at this in the near future, we go to like a 2 hour or a 4 hour to be able to get a little bit more information. We can clearly see that as soon as we end up breaking out of this area, the next area where the market is going to ultimately end up going is going to end up going up to 29,000. As soon as this market ends up breaking out of this consolidation area right here, then the next wave of overall movement is probably going to be the biggest push that it's going to end up having in a while. It's going to end up going up to right around that area. So got to be aware of that. Obviously, as soon as it ends up breaking up, you want to make sure that you end up loading up as much as possible in between this area where we are. Try to see if you can catch it right around that 22,615 area if it does fall down again. But ultimately, that's why I think that the market is going to end up going up to. It's probably going to end up getting up to 29,000 in the very near future. All right, cool. Now, with that being said, let's go ahead and jump right back into US yen. As we go to US yen, hopefully that answered your question on Bitcoin. As we take a look at US yen, US yen from a weekly standpoint, the market was bullish pretty much all the way until early October, when the market ended up when the market ended up pushing up to 151.93. Finally ended up breaking a counter trend line break, and then after that started to be able to fall. Now, typically, what ends up happening is this: the market will break a innermost trend line, then after that will gravitate to an inner trend line. Once it gravitates toward the inner trend line, then after that it will gravitate toward the outer trend line. If it breaks the outer trend line, then the true trend will end up being bearish in this case. Currently, right now, the market is just waving. As this market keeps on moving down, or as this market keeps on trying to settle, uh, this will end up being somewhat of the test area where the market is going to end up falling. As long as it bounces, then after that, we'll probably see that the market will remain to be bullish the whole time. Now, we're going through its third wave of overall movement. Currently, the market right now is at the 8-6 position, which means that you have a very low risk to very high reward on being able to trade this overall pair if that was something that you may be interested in being able to do. Now, this is more long-term trading than it is short-term trading. I'm looking at this from a weekly standpoint to start off. Hypothetically, if you were to be able to take in this trade right now and say, hey, we're looking at being able to buy, meaning that we believe that the United States dollar is going to end up getting stronger, the only risk that you'll have applied to it will probably end up being right around 390 points, 390 pips, uh, with a actual reward of a long-term movement that could get back up to 149, which will be right around 1900 pips of overall movement. Now, a lot of people on this channel, a lot of people that trade in general don't look at taking position trades. That includes me. Not necessarily the most patient person when it comes down to position trades, but we do know that as long as this market breaks the counter trend line and starts to be able to regain to get bullish with some type of catalyst of the United States dollar starting to get strong, then you'll have an opportunity of being able to see or being able to stay in a couple pairs and allow that pair to be able to grow for you as it keeps on going in the upside direction. The problem is we do not have a counter trend line break as a whole to be able to prove that the market is ready yet. We're just working off an assumption at this particular point. Until the market ends up breaking this overall upside movement, I will not be interested in being able to make any trade as this market is basically waving down until it breaks once it breaks a counter trend line break to the upside. Then after that, I'd be interested in being able to trade back up to the positions of where it actually ended up falling, including 137.34, 141, 145, 148, and then ultimately back up to 151, and be able to go from there. But currently, right now, the question is there a trade that you can be able to take right now from a long-term perspective and be able to make off of it? No. Obviously, we've been seeing that this market has been doing counter trend line breaks for its overall trades to the downside. And currently, right now, that wave is still proving itself overall. Once it breaks to the upside, then after that, we can be able to go from there. Okay. Hopefully, that answered your question, Kaz. And we end up going from there. US 30. Let's talk about that real quick. So obviously, everything that's highlighted in yellow is consolidation points overall. And if you notice this, I've been boxing this whole area out literally since June of last year, being able to show from there. Pound Swiss franc looked nice to me. Similar beer, we'll take a look at it. Haven't looked at pound Swiss franc and God knows when, but we'll definitely take a look at it. Answer this question: are you looking at it from a buying perspective or a selling perspective? Are you looking at it from a buying perspective or a selling perspective? So simply put, let's talk about what's happening with US 30. US 30 is in the buy zone when it comes down to the stochastic. If we take a look at it from a weekly perspective, we can see that this market is showing signs of it ready to being able to fall. There was a bearish engulfing candlestick, or not necessarily a bearish engulfing candlestick because it didn't cover up 3 weeks of movement. But last week there was a large bearish. Well, it tried to cover up 3 weeks of movement. Let me explain that. the buyers got back into it. The market has kind of been stagnant. It's kind of proven that there's going to end up being a larger consolidation area that's going to end up being right. It's going to end up being right here. Uh, I'm not gonna lock that in stone, but currently right now we can clearly see that there's we are basically back in the thick of where pricing was long term, with the highs being right around 35,600 and the lows being right around 32. I'm going to say 32,600. That 3,000 point movement was where the market kind of ranged around, especially right around 2021. But right in the thick of what ended up happening at the beginning of the year 2022. So simply put, as we go through and we take a look at this market kind of building out this consolidation, as it stays in the middle, we can start being able to build out. We can be able to start building out the trades that we actually want to be able to take a look at. I'm going to delete this one right here because that was a long-term one. So I think that we need at least another day of not necessarily doing anything and kind of seeing how this market kind of plays itself out. Because if y'all notice, this is where all of the high volume trading actually is, and where most of people have been getting in. And yeah, we might have had short spurts, but there's really nothing to be able to chase after when it comes down to this. Now, the only thing that I can truly say that you could possibly be able to do it, and it would be selling, but it would be selling for just a little bit more, is that what's going on, Block, is that the resistance of this consolidation was right around 33,440. Currently, the market right now is at 33,550. We end up having that large movement to the upside that basically ends up going up to the middle of this consolidation that ended up happening from November 9th to December 15th. But ultimately, as we end up taking a look at the weekly, I think this is more primed and set up for it to be able to fall. We have a small little gap that we can be able to take advantage of right here from this space to this space, which will end up being from 33,600 all the way down to 33,282. We take a look at this from a 15-minute perspective. The question is, do we have a high price to be able to sell if that was something that we may be interested in? Currently, right now, that answer is no. Not necessarily saying that we won't get it. But if I'm making a trade, it's going to end up being two quick scalps. The first one will end up being, let's wait for the 15-minute to be able to get into. Wait for the 15-minute to be able to get a high price, get back up here towards the volume rated profile or the VWAP. From there, let's see if we can get a counter trend line break for that to be able to happen. And once that happens, then after that, we would go from here to here as our first trade. Our second trade will end up being from here to there. So looking for a high price, look for a counter trend line break right around 33,560. Once that falls, you can get out either right around 33,470 or 33,480, or right in between that 33,385 number. If once it ends up breaking past this consolidation that ended up happening yesterday or last week, then after that, it has an area where it can be able to fall from 33,340 all the way back down to 33,250. We end up going from there, but not much. Now, we got to see that happen. There's a lot of ifs and buts and will and hopefuls and everything else like that. But that's about 300 points of overall movement that you could be able to take advantage of if that does play itself out. Just don't have a counter trend line break to be able to work off of yet. I'm not going to look at being able to jump in as of yet. The market has already start to be able to wave and fall. So I believe that it has to jump up first before actually being able to fall. But ultimately, the area that I want to be able to take advantage of will end up being from here to here. preferably from here to the top of the resistance right there. So I would, if anything, if I'm getting in, I got to get out before 33,250. Let's see, pound, Swiss franc. This will be the last one that I can be able to do today. I haven't done pound Swiss franc in a while, but we'll take a look at it. Last time I took a look at it, I was seeing that it was going down this downward channel. There was a D extension that was expected to be at 90.55. Market fell as low as 101.58. From a weekly perspective, we're basically in the middle of this consolidation overall. Answer this question. Are you in the position already? Similar beer, are you in the position? Hey, Brian, what's going on? What's your feedback on the Ball CA? Currently, right now, as we take a look at it, it ended up having 2 wins yesterday. It ended up having 2 wins yesterday on what was it? Where did it go? Where did it go? Where did it go? Hold on for a second, Brian. Let me pull it up. End up having 2 wins on Euro, United States dollar, and NAS 100. Both of them were 0.04% when it came down to change, but it wasn't necessarily bomb burner movements. Currently, right now, we're in the middle of a large consolidation spot, and my ranges are showing that it's at 11.302 and 11.902. So it's probably going to take a little bit of time for it to be able to get in, adjust the resistance numbers of it before being able to take another trade. Yeah. It's probably not going to take a trade yet on it, Brian, just because of how widespread the resistance are. So in this case, it may be one of those situations to where you may today's a manual day. You're going to take a trade. Today. It's going to end up being a manual day. The only one that probably might end up taking a trade, Brian, will probably end up being US 30, but that means that it will have to have a little bit of help from people to be able to push it. But I don't think it's going to end up taking any trades today. If we're being honest, today is a manual day. Similarly, I'm going to be honest with you. We're in the middle of consolidation. There's really nothing to do. If I'm being very honest with you, and just looking at it from a daily perspective, we're in the middle of a consolidation between 1. I'm going to say 1.1 or 1.11, and a resistance at this point of, typically I like doing whole numbers, but let's see. $1.550. For me, that's a 33%. Yeah, it's a 33% chance of being able to win inside of this area. Me personally, I don't like trading inside of these areas. I'll let everybody else fight it out. There's no reason to jump in this trade. And especially if you're not in the position, then there's no reason to jump in the position. Obviously, it can kind of be a little bit more tempting if you take a look at it from a 2-hour perspective. You can see a counter trend line break and you say, hey, I believe that this market is going to ultimately end up falling. But I could say the same thing to the upside. If the market ends up, the market may be in a channel to the upside, and it can continue to keep on waving to the upside, right? You can kind of make arguments about both directions. Um, but ultimately, if you look at it, it's just in the middle of consolidation. Yeah. Yeah, I wouldn't do anything with it. Not yet. Which means to me February is probably going to end up being a very explosive month. But here's the thing, similarly, I'm looking at this from a way of the way that I would end up trading it. Right? You may have some type of strategy or system that just probably puts you in a position of scalping. When I look at manual trading, I look at manual trading from a swing trading perspective. I don't look at it from a scalping perspective. I let my automation system do scalping trades for me. I look at it from a swing trading perspective. I don't. For me, from a swing trading perspective, I don't see anything. At least not yet. Cool. So, that's my time. If you like what I end up doing, please make sure that you end up clicking on that boost button for trading view, and obviously click on that. Make sure you click on that like and subscribe button for YouTube. Obviously, the YouTube page for the people that are looking at um, YouTube page for the people that are looking at this from Trading View is called Trade with Travis. If you're interested in being able to help us out when it comes down to raise awareness when it comes down to that, just make sure you click on the subscribe button when it comes down to that. Obviously, one other thing also, please keep in mind I'm going to end up having another expert advisor review that's going to end up being on the most wanted EA. It's an EA that ends up using artificial intelligence and GDP or GPT-3. Jeez, I always get that wrong. But um, it's shown a lot of promising numbers. I want to see, end up doing a full back test on it and actually going through the phase of being able to edit everything. It's a pretty good system. But like always, make sure that you end up planning your trade your plan. We'll see each and every one of y'all in the next video. Take it easy.